few steps that are useful to go through in calculating a tax provision. The first step is to look at your return to provision true-ups, or your RTPs. And then the next step is you calculate your current tax expense. And after that, step 3, you'll calculate your deferred tax expense. After you've done that, you have what your tax provision should look like, but then you want to go through and calculate the admissibility of any DTAs. And then lastly, the last step I included is to reconcile tax accounts and record your adjusting journal entry so that income tax accounts are correct on your balance sheet. So what are RTPs? Return to provision true-ups arise when what you calculated on your provision on the prior year tax return, or what you calculate on your prior year provision, doesn't match what was calculated when you actually did the prior year tax return. We've already mentioned there are a lot of estimates involved in tax provision, so there are going to be things that changed. So you need to reconcile between your estimated tax from the provision and what was your actual tax on the prior year tax return. These RTPs will affect both permanent and temporary items, and they will run through your current period tax expense. All those RTPs, say when you're looking at your current, on your provision for your current tax expense, whatever differences there were, will run them through your current tax expense. And then your permanent adjustments will impact your rate reconciliation. Also, potentially these RTPs give rise to additional adjustments to the tax accounts. And the other really important thing that we will look at in our work papers in the future, later slides, is that it's important to calculate these RTPs so that your deferred balances roll properly. If you don't adjust for these RTPs, then your deferred tax assets and liabilities won't be correct because they're cumulative amounts. Also, these RTPs will show you how accurate you were in calculating your tax position when you did the provision versus when you did the tax return.